Hello everyone. Today we are going to learn what is financial market, what are the example of financial market and what are the types of the financial market. Starting with financial market. Financial market is a marketplace where the corporate can raise their funds and individual or corporate can invest into the securities. In other words, it is a market which is engaged in collecting money from the surplus unit and lending that money to the deficit unit. For example, forex market, stock market, bond market, derivative market, capital money market, treasury bill market, and so on. If we are going to define this financial market in a one line, then we can say that it is a market where the exchange of security takes place between the individual and the corporates. Let me break this one line into a simple language. Suppose there is a company who is in the need of the fund and an individual who has a surplus money and he is in need to invest that money to earn some extra money on that surplus saving. So where these both individual go? These both individual come at a place and that place is called financial market. These both individual come there and exchange the funds. That is, the company is going to take the surplus saving of the individual and the company is going to give some interest rate of return on that surplus saving of the individual. Individual is happy with that because he is getting some extra money on his surplus funds. Now, moving to the next point, that is what are the types of the financial market. There are mainly two types of the financial market. First is the money market and second is the capital market. Money market, if you are going to talk about the money market, then it is a type of financial market where the highly liquid money is exchanged for a very short period of time. Okay, the maturity period of the money market is up to 1 year. There is a no fixed place to exchange the securities in the money market. That means the securities can be exchanged even over the phones, emails, messages, and etc. We cannot say that earlier this money market is also engaged, but that is not regulated, unregulated. That is, the money lender are giving money to the companies or the businessman who is in the need of the fund at a very high cost. Today, the organized participant in the organized money market are the RBI, NBFC, that is non-banking financial corporations, mutual fund, insurance companies, government, and so on and so on. The money required in the money market is for the day-to-day requirement, for the need of the working capital of the organizations. Okay, so in brief, if you are going to define the money market, that is a market where the fund is exchanged for the maturity period of up to 1 year, that is called the money market. Moving to the capital markets. Capital market are the financial market where the funds are exchanged for a long period of a time. That is, the maturity period of a capital market is more than 1 year. Here, the long-term investment and medium-term investment is done. Okay, that is a company which is a required fund for making buildings, purchasing the new lands, and making the new factories, purchasing new machines. They are need of the large funds and for the long term. So this financial corporation can raise the long-term fund from the capital market. Government is also in the need of the long-term investment for the infrastructure project and they can also raise their fund from this capital market. Government corporations such as the National Highway Authority of India, they are also in the need of the fund. They can also raise the fund from this capital market and so on examples. If we are going to classify this capital market, This capital market is further classified into the two types, that is a primary market and the secondary market. Primary market are the market where the fund is raised for the first time. For example, the fund is raised with IPO and FPO, that is initial public offer, and the follow-up public offer. Then we are going to raise a fund from this financial market. In other words, we can say that primary market is a market where fund is created for the first time. It is regulated by the SEBI, that is Stock Exchange Board of the India, that with the prior permission of the SEBI only, the company or corporate can issue the IPOs or FPO. The second one is the secondary market. Secondary market is a type of capital market where the existing security is traded. That is, a company who has already created the security, and if he has to trade his security, then he will come into the secondary market, such as NSE, National Stock Exchange, BSE, that is a Bombay Stock Exchange. This company came to this stock exchange and they exchange their existing securities at this place. Now, today's topic, conclusion of the topic is that we have learned what is financial market. It is a market where the fund is raised by the corporate and fund is invested by the individual or corporates. We learn what are the example: stock market, derivative market, capital market, money market, etc. We will also learn about the capital market and the money market, that is a type of the financial market. Capital market are those market where the fund is raised for the long term, that is maturity period is more than 1 year, and money market is a market where its fund is raised for a short period of time, that is maturity period is less than 1 year. That's all for the today. We will learn in detail about the money market instrument and capital market instrument in a next video. Thank you. That's all for the today.